So I think that we can start our econ meeting today. If there are no objections, I consider the agenda adopted. I have a couple of announcements to make. A summary of decisions and recommendations of the coordinators meeting of November the 9th. First of all, the evaluation of the candidate for the position of member of the executive board of the European Central Bank, Frank Elderson. Coordinators held an exchange of views following the hearing with the candidate for the position of member of the executive board of the ECB. The second point discussed was the evaluation of the candidate for the position of the ESJAB chair, Aurel Schubert. The third point that was discussed was the urgent taxation file on VAT. It was agreed that the file proposal for a council directive amending council directive to 2006-112 as regards temporary measures in relation to value-added tax for COVID-19 vaccines and in vitro diagnostic medical devices in response to the COVID-19 pandemic would be dealt with under the urgent procedure, Rule 163, with the chair and coordinators being responsible for the file, and November 2nd as the targeted plenary. So now we also have a voting session this morning. So in today's voting session, we will vote on the amendments, final votes, and votes on the decision to enter into interinstitutional negotiations on, first of all, amending Regulation 2016-1011 as regards the exemption of certain third country foreign exchange benchmarks and the designation of replacement benchmarks for certain benchmarks in cessation. Rapporteur Caroline Nachtigall, Renew. And then amending Regulation 2017-1129 as regards the EU recovery prospectus and targeted adjustments for financial intermediaries to help the recovery from the COVID-19 pandemic. Rapporteur Andrei Kovarik from Renew. And furthermore, we will vote on the amendments and final vote on the opinion on strengthening transparency and integrity in the EU institutions by setting up an independent EU ethics body. Rapporteur Durkee and Epping from ECR. The voting procedure we will follow for these remote votes is based on the guidelines adopted by the Conference of Committee Chairs on 8th of April using EP vote. I invite members taking part in the remote votes to carefully follow the instructions provided by the Secretariat regarding EP vote. Due to the number of files and amendments, members are advised to start voting immediately after the opening of the votes. Members and group staff will be informed of the results on each of the voting session by email. The results will also be made public on the Econ website. So I will now open the vote on the amendments to the draft reports and opinion aforementioned. My clock is 9:06 a.m. The Secretariat is requested to send the relevant email to voting members now. The vote will be closed in 90 minutes, so I would say like 10:36 or 37 after the time of opening the vote. So announcing of the second voting session also have to do that. The final votes and the votes on the decision to enter interinstitutional negotiations will take place later today from 2 p.m. to 3 p.m. The precise times of the opening and closing will be communicated by email by the Secretariat. So now we can finally start our our monetary dialogue with Christine Lagarde. So I welcome ECB President Christine Lagarde to this fourth monetary dialogue in Econ in 2020. The previous monetary dialogue took place on September 28th. Today, it is for the third time this year that Econ holds the monetary dialogue with you in this virtual format, and we really hope we won't have to hold many of these. The ECB Governing Council took the latest monetary policy decisions 3 weeks ago on October 29th. The Governing Council decided to keep its accommodative monetary policy stance unchanged and indicated the following. In the current environment of risks clearly tilted into the downside, The Governing Council will carefully assess the incoming information, including the dynamics of the pandemic, prospects for a rollout of vaccines, and developments in the exchange rate. The new round of Eurosystem staff macroeconomic projections in December will allow a thorough reassessment of the economic outlook and of the balance of risks. On the basis of this updated assessment, the Governing Council will recalibrate its instruments as appropriate to respond to the unfolded situation. Now, last week on 11th and 12th November, the ECB held its forum on central banking, which examined the challenges facing central banking in a shifting world. The forum discussed, inter alia, how the ECB's monetary policy has responded to the COVID-19 pandemic and the unique environment, and how it could best contribute to supporting the economy going forward. Moreover, the ECB's strategy review is ongoing. It gives the ECB an opportunity to reflect on the best combinations of tools to deliver financing conditions at the appropriate level, how those tools should be implemented, and what features the ECB's toolkit needs to have to deliver on such a strategy. So, President Lagarde, you said the following in your keynote speech at last week's forum on central banking. The pandemic has produced an unusual recession and will likely generate an unsteady recovery. All policy areas in Europe have responded promptly and decisively. The European policy mix has proven that when different authorities work together, countries can successfully absorb the pandemic shock. The second wave of COVID-19 presents new challenges and risks, but the blueprint from managing it's the same. The ECB was there for the first wave and will be there for the second wave. So now we are very interested to hear more about your assessment of the current economic outlook in the euro area and your expectations for monetary developments looking forward. Let me remind you that the econ coordinators have selected two specific topics for discussion at this monetary dialogue. The panel of experts has prepared briefing papers on those topics, which are, first of all, monetary fiscal nexus after the crisis, and the second, effects of pandemic-induced uncertainty on monetary policy. The briefing papers are available on the econ website. We had an interesting presentation and discussion with some of the authors on Monday, and we also had the pleasure of listening to the remarks of Olivier Branchat, who participated in our preparatory meeting. So in line with the usual practices, the following procedure will be applied for this exchange of views. We will have an introductory remarks by President Lagarde of 15 minutes, followed by 5 minutes question and answer slots, with the possibility of a follow-up question, time permitting, within the same slots. So please keep the time. I ask all the MEPs when we will get to the questions to keep the time, because in remote it's very difficult otherwise to maintain our time. So let's give the floor to Madame President Lagarde. Welcome and thank you again.
Well, thank you so much, Madam Chair. And if I would have dreamed of a perfect introduction, I don't think that I would have come up with something different from what you just said, because you covered most of the key issues that we have been dealing with since September and more. So to you, to honorable members of the Economic and Monetary Affairs Committee, ladies and gentlemen, I would like to wish a virtual remote good morning, and thank you very much for giving me the opportunity to speak to you today as part of our regular hearings. We continue, and clearly this is demonstrated by the way in which we handle our dialogue, we continue to face difficult circumstances from both a health and an economic perspective. Pandemics are highly infrequent and unpredictable events, and consequently, the economic outlook is characterized by high uncertainty. The key challenge for policymakers will be to bridge the gap until vaccination is well advanced and rolled out, and economy and recovery can build its own momentum. In this situation, it is pivotal that public policies chart a clear way forward and inspire confidence to European citizens. Good public policies are what will allow us to persevere in these challenging times, and to do so, they need to be both ambitious and realistic. Given the central role played by the European Parliament in ensuring that EU policies work for European citizens, I could hardly be in a better place to discuss the topics you have chosen for today's hearing. As you said, the two topics are pivotal at the moment. First, I will comment on the evolving economic outlook and the impact of uncertainty on the economy. Second, I will discuss the respective roles of the ECB's monetary policy and of fiscal in this environment of high uncertainty. I will not count the number of times I say the word uncertainty or uncertain, but this is clearly the landmark of what we are facing at the moment, which makes our job incredibly challenging, as is yours. Let's look at the economic outlook, and as I said, monetary policy and uncertainty in that context. Now, while clearly the latest news on the vaccine looks very encouraging, the recent surge in coronavirus cases and the associated reimposition of a number of containment measures are adding to the already heightened level of uncertainty and present a serious challenge to the euro area and to the global economy at large. Following a strong but partial and uneven rebound in real GDP growth in the third quarter, latest surveys and high-frequency indicators signal that euro area economic activity lost momentum going into the fourth quarter. The resurgence in COVID-19 infections is weighing particularly on the services sector activity. That is so for sectoral reasons that we can all think of, but also it is especially vulnerable to the voluntary and mandatory social distancing measures that were introduced. The Purchasing Managers' Index, the PMI, for the euro area shows that while manufacturing output continued to improve, services sector activity weakened further in October. And this uneven impact is also evident across euro area countries, with those countries particularly dependent on tourism and travel affected the most. So far, government support measures, particularly short-time work schemes, have protected households against job losses and drop in income. This has not prevented unemployment from spiking in some countries. In addition, consumers are expected to remain very cautious in the current highly uncertain environment, as the ramifications of the pandemic are threatening people's employment and income prospects. In turn, subdued demand and the weakening of firms' balance sheets and profitability are weighing on business investment. Companies are likely to remain hesitant about committing funds to long-term investments as long as there is continued high uncertainty on how the pandemic will unfold and when, as well as the possible rollout of a successful vaccine. Overall, the euro area economy is expected to be severely affected by the fallout from the rapid increase in infections and the reinstatement of containment measures, posing a clear downside risk to the near-term economic outlook. The weakness in economic activity since the onset of the pandemic is also reflected in inflation developments. Low energy prices and the temporary reduction in German value-added tax are dampening inflation. But weak demand, notably in the tourism and travel-related sectors, and significant slack in labor and product markets are adding further downward pressure. In this environment, we expect the headline inflation be likely to stay in negative territory until early 2021. The key role of monetary policy in this situation is to preserve favorable financing conditions for all sectors and jurisdictions across the euro area, as a result providing crucial support to underpin economic activity and safeguarding medium-term price stability. When thinking about favorable financing conditions, what matters is not only the level of financing conditions, but the duration of policy support too. In this regard, preserving favorable financing conditions for as long as needed is key to support people's spending, to keep credit flowing, and to discourage mass layoffs. As announced at our October meeting, over the coming weeks, the Governing Council will carefully assess the incoming information, including the new round of Eurosystem staff macroeconomic projections in December. And these projections will enhance our information set and allow a thorough reassessment of the economic outlook and the balance of risk. On the basis of this updated assessment, the Governing Council will recalibrate its instruments as appropriate to respond to the unfolding situation with a view to fostering convergence of inflation towards our aim in a sustained manner, in line with our commitment to symmetry. And while all options are on the table, the Pandemic Emergency Purchase Programme that many of you know under the name of PEP and our targeted long-term refinancing operations, known by you as TLTROs, have proven their effectiveness in the current environment and can be dynamically adjusted to react to how the pandemic evolves. They are therefore likely to remain the main tools for adjusting our monetary policy. We responded promptly and forcefully to the first wave that hit the euro area economies by designing new tools specifically tailored to the nature of the shock and recalibrating our well-diversified portfolio of existing instruments. Our measures have been very successful in stabilizing financial markets and underpinning economic activity, thereby helping to offset the downward impact of the pandemic on the projected path of inflation. We will address the current phase of the crisis with the same approach and the same determination. So let me now turn to the second topic that you have selected, which is the nexus between fiscal and monetary policy. The crisis response so far has powerfully illustrated how monetary policy and fiscal policy can be mutually reinforcing in the current circumstances. For monetary policy, as I have argued above, it is crucial to ensure favorable financing conditions for the whole economy. At the same time, fiscal policy has a primary role to play in bolstering demand in the short and medium term, reinforcing confidence and enhancing the growth potential of our economies. Fiscal policy has this particular role for three key reasons, in my view. The stimulus needed to arrive quickly. Number two, fiscal policy has an important sectoral dimension for which monetary policy is not the right instrument. And three, some of the policy tools, for example, credit guarantees, are inherently fiscal by nature. To date, euro area governments have implemented fiscal measures amounting to more than 4% of euro area GDP in 2020 alone. And these measures are in addition to liquidity support initiatives and the operation of automatic stabilisers. These national fiscal responses have been highly effective. Job retention and loan guarantee schemes in particular have helped to secure employment and prevent the unnecessary loss of viable businesses. And they have been crucially complemented by EU-level support, the so-called safety nets, that reinforce their confidence-enhancing effects. By propping up demand and facilitating access to credit for companies in particular, these measures have also reinforced the effectiveness of our monetary policy. While the fiscal measures taken in response to the pandemic should as much as possible be targeted and temporary in nature, weak demand and the heightened risk of a delayed recovery warrant continued support from national fiscal policies. An ambitious and coordinated fiscal stance remains critical, and we should, by all means, avoid cliff effects. Public investment can positively affect economic growth in the current circumstances. In an environment of accommodative monetary policy, public investments have the strongest short-term demand effects, including in terms of cross-country spillovers. Moreover, in times of elevated uncertainty, public investment raises confidence and thus tends to have a higher fiscal multiplier. By raising confidence, a push in public investment is also likely to foster investment from private stakeholders. At the same time, we should not forget that the longer-term positive effects on the economy's potential output and the impact on public finances crucially depend on the effectiveness of investment and the productivity of public capital. Public investment and reforms, especially if geared towards medium and longer-term challenges such as environmental sustainability and digitalization, can build a bridge towards a successful and inclusive recovery. And we should not think about the two in isolation. Combining reforms and investment-led stimulus has the potential to raise growth even more. The two together should shape the future of our economies and ensure that our economies adapt to the new normal that will materialize once the peak of the pandemic is over. For these two reasons, the Next Generation EU package must become operational without delay. This is critically important. The package's additional resources can facilitate expansionary fiscal policies, most notably in those euro area countries with limited fiscal space. We should also ensure proper arrangements to allow for the well-sequenced and effective spending of these funds. I therefore welcome the recent contribution by your Parliament to foster transparency and accountability in the use of this EU fiscal support. It is more important than ever for monetary policy and fiscal policy to keep working hand in hand as we have. The treaty's safeguards ensure that this is done in full respect of the ECB's mandate and its independence. So let me conclude by underlining that Europe's response to the crisis thus far has not only been impressive, it has also been highly effective. Into the second phase of the crisis, we must persevere and continue with the same commitment to keep on delivering results for Europe's people. The overwhelming majority of Europeans, in fact, almost all of them, according to the latest Eurobarometer survey, which I'm sure you're all familiar with, demand such action from us. And as I said in my introduction, let's ensure that the policies we are shaping allow us to get there. As Johann Wolfgang von Goethe once said in English, well, he didn't say it in English, but I'm saying it in English. In the realm of ideas, everything depends on enthusiasm. In the real world, all rests on perseverance. So we shall persevere. Thank you very much.
Thank you. Thank you very much for this insightful speech. Now we can open the floor for our Q&A session. So I will give the floor to the MEPs. They will have 2 minutes for their questions, so please keep the time. And then President Lagarde, you can answer directly, and you have 3 minutes for your answer without waiting for me giving you the floor, so we can save time and avoid connection possible problems.